friends, I'm back with another video, and in this one, I will help you understand components of a statement of financial position with a sample chart of account. Topics to be covered: components of statement of financial position, sample chart of accounts for financial position or balance sheet. Components of a statement of financial position. Assets. An asset is a resource owned or controlled by an individual, corporation, or government with the expectation that it will generate a positive economic benefit. This can be further classified on the basis of convertibility, physical existence, and usage. According to convertibility, it is divided in two sections: current assets and fixed assets, that are also known as short-term and long-term assets. According to physical existence, asset is classified in two sections: tangible assets and intangible assets. And according to usage, it classified as operating assets and non-operating assets. Now let's see a short description of these classification of assets. Current assets. Current assets are assets that can be easily converted into cash and cash equivalents, typically within a year. Example of current asset are cash equivalents, short-term deposits, account receivable, inventory, marketable securities, office supplies, etc. Fixed or non-current assets. Non-current assets are assets that cannot be easily and readily converted into cash and cash equivalents. Non-current assets are also termed fixed assets, long-term assets, or hard assets. Examples of non-current or fixed assets include land, building, machinery, equipment, patents, trademarks. Classification of assets. Physical existence. If assets are classified based on their physical existence, assets are classified as either tangible assets or intangible assets. Tangible assets. Tangible assets are assets with physical existence. We can touch, feel, and see them. Examples of tangible assets include land, building, machinery, equipment, cash, office supplies, inventory, marketable securities. Intangible assets. Intangible assets are assets that lack physical existence. Examples of intangible assets include goodwill, patents, brand, copyrights, trademarks, trade secrets, licenses and permits, corporate intellectual property. Classification of asset by usage. If assets are classified based on their usage or purpose, assets are classified as either operating assets or non-operating assets. Operating assets. Operating assets are assets that are required in the daily operation of a business. In other words, operating assets are used to generate revenue from a company's core business activities. Example of operating assets include cash, accounts receivable, inventory, building, machinery, equipment, patents, copyrights, goodwill. Non-operating assets. Non-operating assets are assets that are not required for daily business operations but can still generate revenue. Examples of non-operating asset includes short-term investments, marketable securities, vacant land, interest income from a fixed deposit. Liabilities. Liabilities are legal obligations or debt owed to another person or company. Classification of liabilities. There are three main classifications of liabilities. Current liabilities or short-term liabilities are liabilities that are due and payable within 1 year. Non-current liabilities or long-term liabilities are liabilities that are due after a year or more. Contingent liabilities are liabilities that may or may not arise depending on a certain event. Current liabilities. Current liabilities, also known as short-term liabilities, are debts or obligations that need to be paid within a year. Current liabilities should be closely watched by management to ensure that the company possesses enough liquidity from current assets to guarantee that the debts or obligations can be met. Examples of current liabilities are accounts payable, interest payable, income taxes payable, bills payable, bank account overdrafts, accrued expenses, short-term loans. Non-current liabilities. Non-current liabilities, also known as long-term liabilities, are debts or obligations due in over a year's time. Companies take on long-term debt to acquire immediate capital to fund the purchase of capital assets or invest in new capital projects. Long-term liabilities are crucial in determining a company's long-term solvency. If companies cannot repay their long-term liabilities as they become due, the company will face a solvency crisis. List of non-current liabilities: bonds payable, long-term notes payable, deferred tax liabilities, mortgage payable, capital leases. Contingent liabilities. Contingent liabilities are liabilities that may occur depending on the outcome of a future event. In accounting standards, a contingent liability is only recorded if the liability is probable, that is, defined as more than 50% likely to happen. Examples of contingent liabilities: lawsuits, product warranties. Now let's see the chart of accounts for a statement of financial position. Cash increases when debited. Account group current assets, account nature assets, affects the statement of financial position. Cash equivalents increase when debited. Account group current assets, account nature assets, affects the statement of financial position. Short-term deposits increase with debit. Account group current assets, account nature assets, affects the statement of financial position. Account receivables increase with debit. Account group current assets, account nature assets, affects the statement of financial position. Inventory increases when debited. Account group current assets, account nature assets, affects the statement of financial position. Marketable securities increases when debited. Current assets account group, account nature is assets, and it also affects the statement of financial position. Office supplies increase with debit. Account group current assets, nature is assets, affects the statement of financial position. Land increases when debited, comes under fixed or non-current assets, account group. Account nature is asset, affects the statement of financial position. Building. Increase with debit. Account group fixed or non-current asset. Nature is assets. Affects the statement of financial position. Machinery. Increases when debited. Account group fixed or non-current assets. Account nature assets. It affects the statement of financial position. Equipment. Increase with debit. Account group fixed or non-current assets. Account nature assets. Affects the statement of financial position. Short-term investments. Increase with debit. Comes under non-operating assets account group. Account nature is asset. Affects the statement of financial position. Vacant land. Increases when debited. Account group non-operating assets. Account nature assets. Affects the statement of financial position. Interest income from a fixed deposit. Increase with debit. Account group non-operating assets. Account nature assets. Affects the statement of financial position. Liability groups. Accounts payable. Increases when credited. Comes under current liabilities account group. Account nature liabilities. Affects the statement of financial position. Interest payable. Increase with credit. Account group current liabilities. Nature is liabilities. Affects the statement of financial position. Income taxes payable. Increases with credit. Account group current liabilities. Nature is liabilities, and it also affects the statement of financial position. Bills payable. Increases with credit. Account group current liabilities. Nature is liabilities. Affects the statement of financial position. Bank account overdrafts. Increase with credit. Comes under current liabilities account group. Nature is liabilities and affects the statement of financial position. Accrued expenses. Increases when credited. Account group current liabilities. Account nature liabilities. Affects the statement of financial position. Short-term loans. Increase with credit. Account group current liabilities. Nature is liabilities. Affects the statement of financial position. Bonds payable. Increases when credited. Account group non-current liabilities. Account nature liabilities. Affects the statement of financial position. Long-term notes payable. Increases when credited. Comes under non-current liabilities account group. Account nature is liabilities and affects the statement of financial position. Deferred tax liabilities. Increase with credit. Account group non-current liabilities. Nature is liabilities and affects the statement of financial position. Mortgage payable. Increases when credited. Account group non-current liabilities. Nature is liabilities and affects the statement of financial position. Capital leases. Increase with credit. Account group non-current liabilities. Account nature liabilities. Affects the statement of financial position. Lawsuits. Increase with credit. Comes under contingent liabilities account group. Account nature liabilities. Affects the statement of financial position. Product warranties. Increases when credited. Account group contingent liabilities, account nature liabilities, affects the statement of financial position. That's all for this video. Your feedback will be highly appreciated and will help us to improve the content. Join us in the next video to know about components of a statement of comprehensive income. Thanks for watching. Do not forget to click the subscribe button and hit the bell icon for latest updates.